Okay. The next thing will go with your problems of income from other sources. Have a look. So coming on to our income from other sources, here is your first question. First question will be telling you which of the following is not included in taxable income. Which is not included in taxable income. Income from smuggling activity, casual income, gift of personal nature subject to maximum 50,000 received in cash. I said you right? 50,000 anything you receive it. Apart from that, everything will be taxable. Which is not included in taxable amount. This 50,000 is not included in taxable amount. Apart from 50, whatever amount you get, it will be included in the taxable amount. And here income received in a country, you are receiving some income. So again, you have to pay a tax over that. Casual income, you are getting some income, you have to pay the tax there again. Income from smuggling activity, you do some smuggling activities. Through that smuggling activity, again you get some income, you have to pay tax. But here the exemption amount is 50,000. Whatever the income that you are going to get apart from this 50,000, you have to pay the tax for it. Okay. So then coming on to your second question. So here is your second question. The second question tells the amount deductible from the family pension. I gave you one note and there I explained regarding family pension in the theory part. So again here, so 15,000 or 1/3 of family pension, whichever is lesser, that amount will be the amount deductible from the family pension. So here you will take 15,000 or you had some pension amount of rupees 20,000. So 1/3 into 20,000 you will do. So that you will get some amount here and here some amount. In these two amounts, whichever is lesser, nothing you will do with your addition, subtraction, nothing you will do. In these two, whichever is lesser, you take that out and that will be your amount for family pension. And then coming on to your third question. So here is your third question. So the third question again tells about Samir. Samir has received the income during 2021. He has received director fees and he has got an income from some agricultural land which is situated in the Pakistan and rent from the let out property. That property is there in the Jaipur and then interest on deposit from HDFC Bank, dividend of the company. His income from the other source is. So what is his income from the other source? So every amount I'll add 5,000, 15,000, and then this 20,000, 1,000, 5,000. So that I'll get my total income. So from the total income, no DDT again is nothing but no income from the other source. So DDT like whichever is that is the state I gave you right in the theory part. Here the dividend received is taxable in the hands of the shareholder. So dividend is the only amount that will be taxable in under the hand of the shareholder. So apart from that, all the amount will be taxable over here because it's getting the income on the previous year. So this year on the assessment year will be paying the taxes on that. So total amount is 46. Understood? Adding and writing, that's all. And then going on to our next question. Okay. So here the Akshay received a gift of 35,000 each on 22nd May 2020 from his 3 friends. Amount chargeable to tax in this case would be. So 35,000, 35,000, 35,000. He has received from 3 of his friends. So the total amount is how much? 1,05,000. 5, 10, 15. So 5 in carry, again 3, 3, 3. So again it is 1,05,000. So here the amount chargeable is 1,05,000. Adding the amount and writing. All the questions will be easy only. Most of the questions based on the theory pattern. For the, okay, which of the following income is taxable as income from the other source? So you are purchasing the house from the husband for inadequate consideration. Husband is giving some house and there is no adequate consideration for that. You don't have an actual value for that. It is inadequate in the nature. Purchase of painting from registered dealer at invoice. You have purchased some painting that is from one of the registered dealer, and at the invoice value that is lesser than the fair market value you have purchased, and you have received the cash gift from the non-resident. Purchase of painting will not come over here also. And then you have all of the above. Usually your cash from the gift of non-resident friend on the marriage anniversary. Suppose he may give you more amount, right? So on that time it is taxable under this head. So that is income from the other sources. And then going on to your next question, that is John engaged in fertilizer trade. Fertilizer trade is the best business you can get into again, and received the rent by subletting a building. So he has one building. In that building, he has a part for fertilizer trade, and the another part of the building he has subletted it. Okay, and this will be taxable under the head again income from other source, because he is subletting his house. So or else he has one property, again in that property some part of the property has subletted. You can see there will be some parking area. In the parking area only they have given some shop like tea shops they'll be having, or any kind of petty shops they'll be having. Why do they have that? Because they have to get an income from the other sources. And then you have the next question. A private limited company engaged in manufacturing activity and had received 20 lakh. So 20 lakh the private company has been received the manufacturing activity, and they have given a loan of 5 lakh to the director who had 30% shareholding cum voting right of the company. They said the loan was repaid by him before the end of the year. The amount deemed dividend arising from the above transaction. So loan is given at 5 lakh, and on the loan only you will be getting the interest, right? Isn't it? So whatever the interest amount you get, can I call that as an income to you? Obviously, it's an income. Income, it is a part of your profit. So again, the part of your profit can be called as a dividend, where you have to give it for the people or the shareholders. So that dividend amount will be arising out of your file. So then going on to our next question. Yes. So the next question here tells about a problem again. Rajiv is 28 years. He's going to receive 2 lakh. Okay, that is as a cash gift. That is on his occasion of the marriage. It includes the gift from non-relative. Here, it also includes the gift from the non-relative 80,000. He's a non-relative. His income by the way of lottery is 3 lakh. 3 lakh he won in the lottery. So then his net income tax liability, ignoring TDS. We have to ignore the tax deducted at source. Then what will be the answer? Gift of 2 lakh received on the occasion of marriage, whether from the relative or non-relative, it will be exempt. Okay, it will be not chargeable here. So it will be chargeable again under the deduction. It will be chargeable, but not over here. And one income is received from the lottery without the basic exemption he has received. That is a 3 lakh he has received. On that 3 lakh, 31.296%. This is standard amount that you have it. So you do that percentage. So that is actually 31% something you will get. So you do that percentage, you will get 93,600. So that will be the amount which will be taxable. His net taxable liability is 93,000. So coming on to your next question, the question number 9, you can see Miss Sithara is a girl, like she has a family pension of 15,000, where they are receiving 15,000 per 1 month, and the income chargeable for the assessment year 21 and 22 of Miss Sithara is, what is the income chargeable again? So it is 1,65,000, because family pension 15,000. Or I said you right, some percentage of 1/3 of that percentage amount of the family pension. In this too, whichever is lesser you will take. So that amount will be your 1,65,000. So then coming on to our last question, I'll go only with the 10 questions. So a foreign institutional investor received the income in respect of securities other than income by way of dividend with referred to the section 115Q and received the receipt of securities from the units referred in the section 15AB. Such income is taxable at 20%. This we haven't studied in theory. But still in CMU also one time they have asked, CS also one time they have asked. So this is an important thing you have to know. So if a foreign institutional investor is receiving some income out of his securities other than the dividend. So if something is receiving other than dividend, then it is 20% the tax. Okay. So let this be your problematic part and you have the remaining questions. I'll be just sending you through the WhatsApp.